It's important for every business to generate revenue, but what's also as equally important is to control the outflow of cash. We have cash going out for things like buying supplies, buying raw materials or inventory, paying our employees. So today I'm going to focus on auditing expenses. You'll also know that I've looked at auditing employee entitlements, so wages, etc. before, and also accounts payable, which is when we buy on credit, and then we have those balances left to pay at the end of the period. But today I'm looking at the expense lines, the types of things that we're going to see on our income statement. So let's get into it. What's up, audit fans? Welcome back to my regular subscribers. Hello to all those people out there. I see viewers in India, in Zimbabwe, in all sorts of fantastic places. So it's really great to have you back here on my channel. To anyone who's new, hi, my name is Amanda and I teach auditing at a major Australian university to undergrads. Now today we're going to be looking at expenses, and I'm not really going to talk about the process today because if you've gone back to my accounts payable 1 video, there's a whole lot on the process to approve the purchase of something or the use of expenditure. Today we're just going to dig straight into the substantive testing rather than the testing around internal controls. If you go back to the accounts payable video where I look at approvals, purchase requests, receiving reports and matching, you'll see all of those typical controls around expenses. Today I'm focusing on just the substantive testing, and of course we're going to look at some practical examples. Now, when auditing expenses, the thing that we're most concerned about is usually understatement. All right, so we're worried about understatement because companies are trying to make their profits look better, and that could be to look better to the market, for managers to achieve some sort of performance-based bonus. Then they're likely to understate expenses. Overstate revenues, understate expenses. So in terms of that understatement, that could be done in a couple of different ways. That could be by manipulating completeness, by not actually reporting all of the expenses that come about, or it could be by manipulating the accuracy of the transaction. So by underreporting the amount for each transaction as it's being recorded. Now remember, you need to think about your individual specific client, or if you're in an exam, the individual scenario. If you're a company that is doing really well during the pandemic, you might be actually trying to overstate your expenses. So if you are receiving some form of government assistance that requires you to have lower profits, then there may be some incentive to actually overstate your expenses somewhat. All right, and remember there are expenses in lots of different types of areas. So you need to look at your client and say, okay, what is more likely? Are they more likely to understate or overstate, or you're not quite sure and you're going to potentially be looking for both? Now, in terms of expenses, there are lots of things that come under expenses. So what is included? All right. I'm not going to include your inventory cost of goods sold type expenses here, but remember we've got operating expenses. So that could be things like electricity for the factory, etc. You're going to have sales and marketing expenses. So that could be advertisements, packaging, all sorts of other things. So in terms of looking at the expenses, again, I'm not going to identify any specific ones, but the process for auditing them is all the same. You've got sales and marketing, you could have legal expenses, all types of different things could come in here. And it's going to be worth making sure that you select a sample of different expenses, but also look at what expenses are larger. So one thing that you might want to do is also try and put all of your expenses in some sort of pie chart, all right? And that way you can find out, okay, if all of these expenses over here that I'm going to highlight in yellow, so let's say all of that is operating, well then you definitely want to make sure that your sample collects more operating expenses than anything else. Now, if we look to this one over here, this one might be sales and marketing. All right, and then over here, you might have legal. All right, so I'm just guessing here. But in this particular instance, you'd want to spend more on your operating expenses and potentially legal expenses, and then slightly less on your sales and marketing, only because they tend to be a little bit smaller. And you want to try and get as much coverage of your population as possible. It's important to make sure that we analyze a mix of our expenses so that we know where there are larger expenses. So obviously you can look here just on the general value. You might also do something by analyzing the percentage change between years to see if anything is unusual. And you might also even just scan through a whole list of all the expense accounts and the balances just to see if anything pops out at you. You might notice that entertaining expenses are really, really high, but in the middle of COVID-19, you can't really do any entertaining. So that would be something to query. So, we're looking at it from an analytical perspective of the size and the percentage change. You might do a scan to look for anything that qualitatively looks a little bit unusual. And then also, if you're going to the client, look around. You think, oh, okay, this is a marketing firm. Why are they spending money on concrete or something that just doesn't make sense? So it's about looking holistically at that particular issue. Now, the next thing I'm going to do is I'm going to attack this problem or our task of designing procedures from the assertion perspective. I always start with the assertion. So let me write those down first. Okay, so I have my assertions: occurrence, completeness, accuracy, cutoff, and classification. Remember, these all come out of ISA 315. In the appendices, for some, I think I want to say paragraph 198. I'll check and make sure I put it in the video to be sure. But I need to always start with my assertions. Now, remember, I talked about the assertions that I thought might be at greatest risk of misstatement, potentially if we're worried about understatement, completeness, and accuracy. So in those instances there, I might want to use more than one procedure. That's always a possibility to help me identify potential misstatements. So the first thing we're going to start with is occurrence. Did sales really occur? Now we know that we always want to start with vouching. Okay, so starting at the end and working backwards. So vouching a random sample of expense journals. I almost wrote sales journals there. Expense journal entries. All right, 2, and we probably want to see some sort of invoice from the supplier, some sort of receiving report. Did we actually get the items or receive that particular service? We want to also make sure that there's an approved purchase request. All right, so I've talked about the actual procedure I want to do. I'm vouching. I've talked about my sample. I'm going to use a random sample of the journal entries, and I'm going back to check those items. So in looking at those documents, I need to be also a bit more specific. So I'm going to vouch to those items, ensure transaction was real and prices and quantities were accurate. Or let's write correct. All right, so I want to make sure that there is that documentation. Now, you notice that I've also said prices. So where I said prices here, that's also going to help me later on down here when I'm testing accuracy. All right, so I'm just checking those prices for now, and then I'm going to go into a little bit more depth. So for occurrence, we're not so worried about fake expenses unless potentially we think there's some sort of related party transaction scam going on, but we should always still check occurrence. Now we're more worried about completeness, all right? Did all of the expenses, have they all been recorded? Are they trying to hide any by just not recording them? So we know there for completeness, we want to trace a, and I'm using haphazard sample of purchase requests. Now, you could also potentially say here approved purchase orders. Depends on the process in your company, really, that you're looking at. A sample of purchase requests to receiving reports, invoices from the supplier, and journal entries. All right, because remember, when the invoice is received, when we receive the goods, we should have that journal entry that says debit expense, credit accounts payable. You could also go one step further there and potentially also look at the payment process. All right, so was there a three-way match? Was there a payment to that particular supplier? And you could do that as sort of a combined purchases or expenses and accounts payable testing. So we want to make sure that that process is followed through the entire way so that all documents are present and accounted for. Now, during that process of checking the journal entries, you might also decide that you're going to test classification. So here we're going to write, while testing completeness, check that the journal entry is correct by matching the accounts used to the chart of accounts. Remember that the chart of accounts is the mega list of all of the accounts. So make sure it's going to the right place. So you're wanting to check that for electricity, it's going debit electricity expense, and it's not going to somewhere else, entertaining, marketing, etc. So you can do that there. So, a lot of these tests, what might sound like a lot, you're doing these tests in a combined fashion. Now, if you're also worried about completeness, but you think, oh, well, what if they've destroyed the purchase requests? The other thing that you can do is examine a sample of bank statements and match payments to expenses or purchases. Just like you would use a subsequent cash payment test to help you identify any accounts payable that might not be recorded, you can look at bank statements and try and match them back to expenses or purchases just to see if anything doesn't match up. So do you have any expenses that don't link back to an expense account? What were they for? Because just because people purchased items doesn't mean that they don't have to pay for them later. So that's another way that we can do that. So when it comes to accuracy, what we need to do is we need to make sure that everything is recorded at the correct dollar value. So remember up here when we looked at occurrence, and we're going to make sure that the prices and the quantities are correct. You could do that when you're tracing as well, but let's write a procedure here. While tracing and vouching, recalculate the value or amount of the transactions. All right, so check quantity charged matches the quantity ordered. Oops. Let me try and shorten that. Quantity ordered price is as quoted. So if we were quoted $10 per item, then, did we get charged $10 per item? And recalculate the line items. All right, now let me just make some more room here so that I can put this down here. Let's put that there. Okay, so here is an example of an invoice. We've got the quantity, we've got the item, we've got the price, we've got the total. So we bought 5 of item A and they were $5 each, so it should be 25. We bought 10 of item B at $7 each. That'll be 70, which gives me a total of 95. All right, so that part where I said, okay, what I'm going to do is I'm going to recalculate the line items, that is over here. And so we say 5 times 5 equals 25. So that's recalculating the line item. Now you might sometimes see this as like calculating the extension, so it's really the extension of the line, and checking the total sometimes can be called footing the total. I tend to use just plain English here, but if you're at a specific audit firm, they might use some of these specific audit terms, but I'm approaching this from the perspective of you don't know any of those specific pieces of terminology. So recalculating the line item is looking at that individual line item. So you're going to recalculate the line items and check the total of the order is correct. Okay, now when it comes to doing that total, I'm going to do this in a different highlight color here. You're going to go, okay, 25 plus 70, does that equal the 95? Now, remember that if you're doing this while you're vouching or while you're tracing, you're also going to be checking this to the journal entry. So another thing that we can put in here, but you're sort of going to do at the same time as testing occurrence and completeness, is that you will also match rather than match, let's say more accurately, check that the expense total matches what is recorded in the journal entry. Now remember here, we also did our cutoff test, which talked about checking those debits and credits. You could have a couple of different journal entry options here. Option 1 is going to be debit expense credit cash, if that was paid for straight away, or you could have debit expense credit some sort of payable. Okay, but what we're looking at this point is just that initial recognition of the expense. You don't have to worry necessarily about discounts, but if you're following it right through to the payment, if we pay early, we might receive a discount. So that's something that you would need to include as well. So that's accuracy. And remember, while I'm testing completeness and occurrence, I can test accuracy using that same sample of documentation. So don't go away and select new samples. You can use just the samples that you've already collected. Now, the last one that we've got here is cutoff. Let me do this in a different color so that it's really clear. Let's use orange here. So with cutoff, is everything recorded in the correct financial period? So here we don't need to select a sample over the entire period. We can select just in a narrow band. And usually it's like 2 to 4 weeks on either side, depending on whether they use accounts payable or cash. If it's cash only for expenses, then you can make the window a little bit narrower, a week or 2 weeks, but 2 to 4 weeks is about usual. So when we do what is sometimes called a cutoff test, that's not very descriptive. So I'm going to put in a bit more description here. So I'm going to select. So typically here we're going to need to look at a block, all right? Or we're going to stratify our sample. Now it depends on how many transactions there are. If there are only a small number of transactions, just select a block of transactions before and after the end of the financial period. If it's a larger company, you can't test all of them, so you're going to need to select a sample. So select a haphazard sample. of. Now, this is where you can do two different things, all right? So I'm going to go option 1 here. Journal entries for expenses 2 weeks before and after the end of the financial year, okay? And with those journal entries, what you're going to do is vouch to proof of receipt of the items. Goods must be received by the end of the financial year, EOFY. All right, so if I'm vouching, I'm starting at the journal, I'm going back. I want to make sure that the items were received before the end of the financial year. The other option, option 2 here, and you should probably do both of these. Rather than just do one, do both of them. Attack the problem from both ends of the spectrum and meet back in the middle. So select a sample of receiving reports and trace to the journals. All right. Goods received. Oh, my spelling is terrible today. Before or on the end of the financial year, recorded in this period. All right, and that sample that you want to select there is transactions, goods that you know that have been received before the end of the financial period. So I'm going to add here sample from 2 weeks before or on the end of the financial year. I always like to check some transactions right on like the 29th or the 30th of June, which in Australia is our end of financial period. It could be December, whenever it is. If you select some that are really close to the end of the financial year, it's really common for accounting departments to perhaps have be inundated with purchases, so they might not get to post some of these journals till later. So it's really common to have mistakes here that need to be adjusted for. So that's the way there with cutoff. I've actually got 2 tests, one starting from after the end of the financial period and working backwards, one starting from before the end of the financial period and sort of meeting together in the middle. So those are all of our procedures, and that's quite a lot here that you can see related to purchasing and expenses. Of course, remember up here I talked about that we need to remember what type of expenses we're actually looking at to really dig into designing some specific tests. So these are really generic procedures, but if you were asked in an exam to audit legal expenses, then you're going to need to specify in more detail. It's always better to be more detailed, use information from the case, and have it step by step so that you can get as many marks as possible from an assessment perspective. Customize those procedures to what you're actually looking at. Now, of course, this is not an exhaustive list. If you've got any procedures that you've used in practice or that you've seen somewhere else or you want to ask me about, share them in the comments with our community and I'll get back to you. Thanks for watching. We've got plenty more videos in this series coming up. I've got lots to do. My schedule is a little bit off in terms of posting at the moment because of my real life job, which is really starting to get intense at the moment with exams coming up. We're heading to the end of semester and we're trying to plan out 2021 and what's going to happen. But I will still keep having videos, so I'd really appreciate it if you click to subscribe if you haven't already. Give the video a thumbs up if you thought it was useful. And I want you all to stay safe, stay well, and I'll see you next time.